Hey everyone, welcome back to Financial Free Facts. Today, we're diving into a topic that affects all of us, money. Whether you're trying to save for a big purchase, pay off debt, or just build some financial security, avoiding common money-wasting habits is key. In this video, we're going to cover the 10 biggest money drains in life and how you can avoid them to keep more of your hard-earned cash. Let's get started. Section 1. Insurance overload. First up, let's talk about insurance. We all need insurance to cover the big risks in life, like health emergencies, car accidents, or damage to our homes. But the problem arises when we start paying for unnecessary insurance policies. For example, you might be paying for extended warranties on electronics that you rarely use, or insurance for a specific event that has a low probability of happening. The key to saving money on insurance is to regularly review your policies and cancel those that aren't necessary. Focus on covering only the essential risks, like health, home, and auto. Remember, insurance is supposed to protect you from financial ruin, not drain your finances with premiums for things you can afford to replace out of pocket. Section 2. Buying a house. Next, let's discuss buying a house. Owning a home is often considered the ultimate financial milestone, but it's not always the best financial decision for everyone. Home ownership comes with significant costs beyond just the mortgage. Think about property taxes, homeowner's insurance, maintenance, and repairs. All these add up over time and can strain your budget. On the other hand, renting offers flexibility. You aren't tied down to a mortgage, and you can invest your savings into assets that have the potential to grow, like stocks or mutual funds. For many people, renting while investing the difference can be a more effective strategy for building wealth, especially if you're not ready to settle in one place for a long time. Section 3. Takeaway coffee. Now, let's talk about that daily coffee habit. It might not seem like much to grab a latte on your way to work, but those small purchases can add up quickly. If you're spending $3 to $5 every day on coffee, that's over $1,100 a year. Brewing your coffee at home not only saves you money, but also allows you to control the quality and flavor of your drink. You can invest in a good coffee maker and high-quality beans, and still come out ahead financially. Plus, making your coffee at home can become a relaxing morning ritual that starts your day on the right foot. Section 4. Subscription overload. Subscriptions are another sneaky money drain. With the rise of streaming services, subscription boxes, and memberships, it's easy to sign up for things you don't really need, or worse, forget about altogether. Companies often bank on the fact that people will keep paying for services they don't use. To combat this, take time every few months to audit your subscriptions. Are you really watching all the shows on every streaming service you subscribe to? Are you using that gym membership regularly? If not, it might be time to cut back. Even small monthly fees add up to a significant amount over the course of a year. Section 5. Luxury spending. Let's talk about luxury spending. We all enjoy splurging on nice things every now and then, but consistently buying luxury brands can be a major drain on your finances. Whether it's high-end fashion, expensive gadgets, or gourmet dining, the costs can spiral out of control if you're not careful. The key is to differentiate between needs and wants. Ask yourself if the luxury item truly adds value to your life, or if you're just buying it for the brand name. Often, you can find quality products that aren't tied to luxury labels, giving you the same satisfaction at a fraction of the price. Smart spending doesn't mean depriving yourself. It means making choices that align with your long-term financial goals. Section 6. Car depreciation. Let's move on to car depreciation. Cars are notorious money pits, not just because of the initial purchase price, but also due to the rapid depreciation that occurs as soon as you drive off the lot. On average, a new car loses about 20 to 30% of its value in the first year alone. Over 5 years, that number can reach up to 60%. One way to avoid losing so much money is to consider buying a used car. A vehicle that's a few years old has already taken the biggest depreciation hit, allowing you to save money while still getting a reliable ride. Plus, with today's technology, you can easily research the history of any used car to ensure you're making a smart purchase. Section 7. Impulse buying. Next, let's talk about impulse buying. We've all been there. walking through a store or browsing online and suddenly seeing something we didn't know we needed until that very moment. Impulse purchases are often driven by emotion rather than necessity, and they can quickly add up, blowing your budget. A good strategy to combat impulse buying is to implement a cooling off period. For example, give yourself 24 hours before making a purchase over a certain amount. This gives you time to really think about whether you need the item or if it's just a fleeting desire. Another tip is to always shop with a list, whether it's groceries or other essentials, so you stay focused on what you actually need. Section 8. Addictive habits. Addictions can be one of the most destructive money drains in life. Whether it's smoking, drinking, or even gambling, these habits can cost thousands of dollars a year, not to mention the potential health costs that come along with them. For instance, a pack-a-day smoker could be spending upwards of $2,000 annually on cigarettes alone. The best way to tackle this issue is to address the root of the addiction. This might involve seeking support, setting clear goals, and finding healthier alternatives. Not only will this save you money, but it will enjoy a better quality of life. Section 9. In-app purchases and microtransactions. In today's digital age, in-app purchases and microtransactions have become a common way for companies to monetize their apps and games. While spending $1 or $2 here and there might not seem like a big deal, these small purchases can quickly add up, leading to a surprising amount of money spent on virtual goods that offer little long-term value. To avoid falling into this trap, set clear boundaries for your digital spending. Turn off in-app purchases where possible, or limit your budget for these types of expenses. Remember, those small amounts can be better spent or saved for something tangible that will benefit you in the long run. Section 10. Overdraft fees and credit card interest. Finally, let's talk about overdraft fees and credit card interest. These are two of the most common and costly financial traps that people fall into. Overdraft fees can quickly add up if you're not careful about managing your bank account, while credit card interest can compound your debt, making it harder and more expensive to pay off over time. The best way to avoid these pitfalls is to stay on top of your finances. Set up alerts for low balances, create a budget, and pay off your credit card balance in full each month if possible. If you're already in debt, consider transferring your balance to a card with a lower interest rate, or look into a debt consolidation plan to make your payments more manageable. Conclusion. So there you have it, the 10 biggest money drains in life and how to avoid them. By being aware of these common financial pitfalls and taking proactive steps to manage your money wisely, you can keep more of your hard-earned cash and work towards achieving financial freedom. If you found this video helpful, don't forget to give it a thumbs up and subscribe to Financial Free Facts for more tips on managing your money and building wealth. Thanks for watching, and see you next time.